Welcome back to this Moneycontrol live stream. You're watching Closing Bell on Moneycontrol with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, it was a good day of trade.
Yeah.
We were above that 19,500 mark around midday, but then we fizzled out. And all the sectors were in the green, but towards the end of the session, we saw the Nifty Metal as well as the Nifty Financial Services Index slip in the red. In fact, the Nifty Financial Services Index was down somewhere around 200 points from the day's high. So that was one pocket, that kind of, dragged the index a little lower from the day's high. So if you look at the other indices, the auto and FMCG packs were doing extremely well for themselves. On the other hand, as I mentioned, metals and banks coming off the day's high. Nifty IT interestingly trades with slim gains ahead of the earnings from heavyweights like TCS and HCL Tech tomorrow. And when you look at the Nifty gainers, Eicher Motors, Sun Pharma, Apollo Hospitals, Power Grid and Maruti were among the top movers. On the flip side, UPL, I think that stock hit a 52-week low in today's session. JSW Steel, Axis Bank, Bajaj Finance, Hindalco and HCL Tech ahead of its earnings among the top laggards on the Nifty. Talking about, Vedanta as well, that stock came off somewhere around 2% on the back of, Foxconn pulling out of the chip JV worth $19.5 billion. That stock was under pressure, but the broader end of the markets were fairly strong given the fact that both the Nifty mid and small cap indices ended with gains of somewhere around nearly 1% or thereabouts. But all in all, not a bad day of trade given the fact that the Nifty did manage to end above that 19,400 mark. From the broader end of the markets, there were quite a few movers in today's session, Yatin.
Yeah, and we had the entire defense pack which was buzzing, be it Mazgaon Dock, Kochi Shipyard, be it BDL, be it HAL, or the private sector companies like Premier Explosive, which got a order from the Indian Air Force. We also had the likes of Zen Technologies, which got defense orders for various defense applications. So the entire defense pack was buzzing in trade. Obviously, this also comes in the pretext of PM Modi visiting France, and there have been news reports which suggest that there could be some deals on Rafale aircraft, there could be some deal on Scorpion submarines, and India could procure or do a historic defense deal with France also. So ahead of the US visit, we had the defense stocks which were buzzing, and now again when PM Modi is visiting France with defense on agenda, we have the entire pack again buzzing in trade.
Right, Yatin. Interestingly, Mazgaon Dock was the first stock on my list today, which we have already covered. But just reiterating a bit, of course, there are reports that Defence Ministry has cleared the proposal to buy 26 Rafale jets as well as 3 Scorpion submarines.
Correct.
Now, if these, in fact, the Scorpion submarines are expected to be manufactured as Mazgaon Docks facility, along with the French company Naval Group. And on the back of that, the stock yesterday as well was up somewhere around 13% or thereabouts, and even today it's up 10%. In fact, it has hit a fresh 52-week high, fresh life high for that matter. And if you look at the stock, it has given 5x returns over the last 1 year. PE ratio is somewhere around 28.5, lower than the sector PE per se.
Correct.
And return ratios have also been in excess of 20% last year. So that means healthy return ratios. And of course, as and when we hear of more defense deals being inked, these stocks stand to benefit. So Mazgaon Dock, a high flyer in today's session as well.
Absolutely, and we also had various defense stocks in the non-shipping space also doing well. So the likes of BDL were also up by nearly 14–15%. HL was also up, quite a bit, and L&T also was in focus because they are now approved to repair US vessels also.
Yeah.
Now, this was about defense stocks, but Bharti Airtel, that is also one stock which was moving in trade. We had CLSA, which had a buy report today on Bharti Airtel, the target of 1030. Now, for Bharti, CLSA believes that the company has been growing their cloud services business. They want to expand their data service centers. And moving ahead, we could also see the subsidiary Nextra trying to triple the data center capacity to 400 megawatts by 2025. Obviously, this is small business, but a very fast growing business, because of which there could be some significant value coming in for the shares of Bharti Airtel. Obviously, on the telecom front, they are doing well. Earnings have been quite stable, and on the data center front also, Bharti has been doing well, which according to analysts have been something which will aid the overall growth for consolidated Bharti financials. As I said earlier, CLSA has a buy rating target 1030.
Right, Airtel as a stock has also done pretty well on a YTD basis. It's up somewhere around 30% or thereabouts. And of course, with this extra data usage and more 4G additions, and of course, in 5G
Yes.
coming into play, things are looking pretty healthy for Bharti going forward. But the next stock on my list is Cartrade. It has made an acquisition, OLX business, auto business. In fact, India auto business, Sobek Auto for 530 crore rupees or thereabouts now. Sobek's Auto runs automatic digital platform. This is a classified internet business, and Cartrade says that it will bring about synergies with its existing business, and it will also aid the company's used car business. But interestingly, Cartrade was looking to in fact, make some inorganic acquisitions, and it had earmarked somewhere around 750 crores for that purpose just a few months ahead of this acquisition, and now it has made a significant purchase out of it. And recently it had also bought integrated platforms like Car Wale, Shriram Auto Mall, Bike Wale and the like. So it has been on an acquisition spree of late, but given the fact that if you look at the stock price over the last year or so, it has declined 17% at a time when all the other new age tech firms have made a very good recovery from their lows. Cartrade hasn't really managed to do that, but and if in fact the stock is trading at a discount of 25% from its 52-week highs as well. So we'll have to see whether or not this acquisition adds some muscle to Cartrade, and whether or not the stock price sees some kind of an improvement going forward. But for today, the stock was doing pretty well, up 17% or thereabouts when I last checked. If you look at the return on equity for the last financial year, it was somewhere around 1.7%. It's a newly listed company. We'll have to see how it pans out going forward. But if you look at what domestic mutual funds and FIIs have done with their stake in the company, they have reduced their holdings in this stock over the last quarter or thereabouts. So that was one stock on my radar. Cartrade hasn't really done all that well over the last 1 year. The recovery hasn't been there, but we'll have to see how things pan out after this acquisition that it has made.
Absolutely, and these are the stocks which have been in focus, because all of these new age companies have been bouncing back sharply from the lows, because during the time of the IPO, all of these had some very strong institutional demand, but post the valuation correction of startups, all of these e-commerce companies and online companies, we have seen come back, coming in, and obviously there is a sign of consolidation in these businesses, because OLX was one of the biggest competitors to Cartrade, and after acquiring competition for a paltry sum of 500 crores odd, probably things could look better in terms of the competitiveness of the business. That said, we also have Concor on our list today. Macquarie has a neutral rating on this one with a target of 620. Now, Concor is off lately in news because recently Moneycontrol report suggested that the Ministry of Finance through Deepam would initiate the strategic divestment procedure quite shortly. Obviously, apart from that, the fundamental triggers are also that the dedicated freight corridor is moving in full swing. Their results would start playing up the earnings of Concor. Macquarie says that the overall Q1 volume growth came in tad weaker than expected, but the import-export handling business is partly offset by the strong performance of the domestic business. Now, if you look at Concor, they have regained some market share in Q1, which is a good thing, and the domestic business also looks good. Last time, the management of Concor said that they are also looking to transport cement on rail containers, which would be a big volume business for them. So earnings wise, there are a lot of triggers for Concor moving ahead, plus there could be some additional upside to the stock if the government really initiates the strategic divestment of Concor. They intend to sell close to 26% in this railway major. So let's see how things are moving, because railway as a pack has been doing well, and probably Concor is yet to catch up.
Well, of course, we'll be watching out for developments on the divestment front going forward, and that would maybe be a deciding factor as to where the stock is headed going on from here. Well, I think with that, we are done with the stock picks that we had in our show today. But of course, we will be back with the markets tomorrow morning at 8:30 a.m. Don't forget to tune in. But if you have any comments, leave them in the comment section below, and we will take note of them. With that, it's a wrap on this edition of Closing Bell. Thanks a lot for watching. Stay tuned to Moneycontrol for all your other news and updates.